Hey everyone and welcome. Today we're going to be talking about recurring behaviors in the markets. And we'll do it by focusing on one of the most traded cryptocurrencies over the last few years, Ethereum. So we're going to start by analyzing the daily price behavior of this cryptocurrency. And then we'll try to figure out if there is a way to exploit these price changes in trading systems. I'm one of the coaches of Unga Academy, and before we start, I invite you to please go and subscribe to our channel, click on the notification bell, and, why not also give a like to this video. Then if after watching it you believe it hasn't been helpful to you, feel free to take it off, but I'm sure you're not going to. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. I want to start by showing you how an average day on this market looks like. We're going to be talking about the Ethereum USDT market, and we're going to be using data provided by Binance. So in this chart, you can see how an average day looks like on Ethereum from a percentage point of view. Now, we don't use absolute values because it wouldn't be possible to draw a comparison between the current absolute values and those we had at the beginning of 2018. Today, Ethereum is worth around $4,000, while at the beginning of 2018, it was a bit more than $700. So to make a comparison, we need to analyze the average behavior that this market has during the day in percentage terms. As you can see, there is a clear difference between what happens in the first half of the day and what happens in the second half of the day. With regards to the times of the day, I want to specify that we are using Binance official times, which means the time zone is GMT. If we consider the period that goes from January 2018 until the moment we're recording this video, which is November 2021, it would seem that there is a sort of a statistical edge in going short on this instrument from around midnight until 11 in the morning. The lowest point is at 10:50, so we can round it off at 11, and then we can trade long from 11 in the morning until the end of the session. That is until 11:30 p.m. or 11:45 p.m. Now we're going to use two simple lines of code that tell the machine to go long if the time is equal to 11, go short if the time is 23:50, and then go along again at 11 a.m. the next day. So let's compile the strategy and let's see what result it would produce. Here we can see the first trades, and this is the equity line. So now I'd like to point out another important thing. Every time we open a position, this position has the same dollar value, and in this case the dollar value of $100,000. But let's take a look at the metrics of the strategy. We can see that the average trade is $213, which means it's a pretty low average trade of just 0.2%. The number of trades is very high, 2,800, and this is because we are testing our script on 4 years of historical data. Since this market is open almost 365 days a year, it makes an average of 2 trades per day, which means that we would have around 1,400 long trades and 1,400 short trades. Of course, the average trader is greater for the long trades than the short ones because, on average, this market has been rising throughout the years. Nevertheless, if we compare this performance with a buy and hold strategy, we can see that these results are not so bad. So, matter of fact, we always have open positions. And if we were to trade only long, we would receive some nasty surprises and get some very high drawdowns. So let's make a comparison and see what changes between using a buy and hold strategy and going short in the first half of the day and long in the second half of the day. To do this, we need to change the script this way. Now, we're simply using this input, bias, to divide the strategy in two. So if the bias input is equal to 0 at the beginning of the session, so at 0000, we'll buy and then sell with this command, set exit on close, at the end of the session, so 2400, and then 1,000th of a second later, we'll go long again. If bias is different from 0, and so is equal to 1, we'll exploit the bias, which means that we will go long at 11 and short at 2350. So let's compile the strategy and optimize it. Of course, the optimization will be very simple in this case because we only need to optimize one input, bias, from 0 to 1. So let's run our optimization for these two combinations and see the results. With bias equals 0, I remind you that in this case we're using a buy and hold strategy, and with the same counter value of $100,000 for each position, we would get a net profit of $300 in the first case and over $600 in the second case. The number of trades has doubled because we no longer make just one trade from the beginning to the end of the session, but we make two trades, one long and one short. The average trade stays the same, which is quite impressive. Half of our positions are short trades, but this doesn't affect the average trade, which remains the same. Anyway, the number that I really want to compare is the maximum drawdown. With a simple buy and hold strategy, we would get a crazy drawdown, while by exploiting this market edge, we would be able to reduce it considerably. Actually, it would become 4 times less than the drawdown of the buy and hold of this cryptocurrency. Okay, so at this point, I'd like to stress in an even clearer way that for almost half the time, we are trading with short positions. But how would this bias strategy have behaved in 2021? With Ethereum jumping from $700 to $750 to $4,400 of value with peaks of $5,000. What would have been its performance? So to answer this question, let's take a look at both the short and the long trades. So let's activate our bias strategy and go and see the performance report. Now we see that in 2018, the long trades wouldn't have lost, wouldn't have earned, wouldn't have done anything. And the reason for this is that in the year 2018, Ethereum was mainly in a loss. 2021 would have been fine for the long trades, while the short trades, well, you may say they're bad. I know that the equity line is pretty bad, but it doesn't lose much either, I think. I mean, since the beginning of 2021, where we are now, so we've lost just about $10,000 to $15,000 with the short trades. If we were to further investigate what happened in 2021 from a statistical point of view, we could take the red line, which represents the average trend of the session in 2021 alone, so from January 2021 to November 2021, and compare it with the average trend of the session considering the whole history, so from January 2018 to November 2021. As you can see in the first part, so where we go from about midnight to 11 in the morning, the total bias went down. Whereas now that the bias doesn't receive anything from the short trades, we're in a very slight loss. Now this is very important in my opinion because it makes us understand that despite the strong climb of this cryptocurrency, I remind you that it went from $700 to over $4,000 by trading half the time. So only in the second half of the day, we would have had a performance that equals the one we would have had if we traded all day long. And I'll tell you more, the drawdown would have been slightly lower. So it is possible that there really is an exploitable edge in this market, and that trading long only in the second half of the day could pay off. The average trade we found using these two lines of code is obviously not yet sufficient to cover the trading costs. However, we still have a clear edge here, and knowing how to exploit it would give us an advantage against the market. Now, to be able to make the most of this and other edges in the market, we rely on the method developed by the only 4-time world trading champion, Andrea Unger. It's a method that condenses a lot of experience and study of the markets, and it's proved to be profitable also in new and emerging markets such as cryptocurrencies. If you're interested in learning more about this method and deep diving into these topics, I'm going to leave you a link in the description of this video. Just click it to get access to a completely free webinar in which Andrea Unger himself shows you what the key principles of our systematic approach are. Well, I really hope that this video was helpful, and if you haven't done it yet, I invite you to please go and subscribe to our channel. Click on the notification bell and give us a like to this video. If you'd like to see more videos like this one, or you want to learn more about other topics, feel free to write it in the comments. And with that, thank you so much for watching, and we'll see you in our next videos. Until then, stay safe. Bye-bye.